Hi, Professor. This is Christina here. So this is my PPT. And let's start with the training session, Understanding the Accounting Basics. Let's move on. Okay, so let's begin with the objective and the agenda. So to provide a comprehensive understanding of the accounting principles, focusing on the key concepts from our chapter 1 and 2 of financial and managing accounts, information for decisions by Wild and Shu 2022, as well as supplementary materials from the YouTube videos, which was available in the gap. And this is the agenda overview of our chapter 1 and 2, and understanding the double entry accounting, significance of the trial balance, derivation of the balance sheet from the trial balance, etc. And let's begin with the overview or summary of the chapter 1 and 2. So in chapter 1 of financial and managerial accounting, information for decisions, mainly the author provide an introduction to the role of accounting in business, and the whole chapter covers the fundamental concepts and principles essential for understanding the accounting process and its significance in the decision making within the organizations. And I noted down some key points, which mainly focusing on the chapter 1, which is starting with the introduction to the accounting. It gives a definition of accounting and its importance in providing the financial information for decision-making purposes. And the second is the users of accounting information. It talk about the identification of various stakeholders, including the internal users, such as the management, and the external users, for example, investors and creditors and all, and their reliance on the financial statements. And the third key point is the forms of business organizations. So it explained about the different types of business entities, including the partnerships, corporations, with an emphasis on their distinct characteristics and implications for accounting. And the next key point that I note down is ethics in accounting. It's the discussion on the importance of ethical behavior in accounting practices and the consequences of unethical conduct. And the next key point is accounting profession. So it's giving as an overview of the accounting profession and including the professional certifications such as the CPA and regulatory bodies such as the Financial Accounting Standard Board, that is FASB. And this is the summary of the chapter 1. And let's move on to the chapter 2, which is the accounting for business transactions. So the chapter 2 give us an idea into the more practical aspects of accounting by focusing on the recording of business transactions, and it provides a detailed examination of the accounting equation and double entry accounting system, and laying the foundation for understanding how financial transactions are documented and classified. And main key points that I got from the chapter 2 is accounting equation. That is, assets is equal to liabilities plus equity, and its significance in reflecting the financial position of the business. And next is the double entry accounting. So this chapter giving us an introduction to the double entry accounting system, and which requires every transaction to be recorded with at least two entities, that is debits and credits, to maintain the balance of the accounting equation. And next is the T accounts. It's giving an overview about the T accounts as a visual representation of the double entry accounting system, which debits record on the left side and credits on the right side. And next is the recording transactions. It's a step-by-step guide on how transactions are recorded using the T accounts that we mentioned before, and including the process of generalizing, posting to ledger accounts, and preparing the trial balances. And next key point that I got from the chapter 2 is the financial statements. It gives an overview of the primary financial statements, the income statement, statement of retained earnings, balance sheet, and statement of cash flows, and their role in summarizing the financial information for external users. So overall, the chapter 1 and 2 mainly give us a comprehensive introduction to the accounting principles, and ranging from theoretical concept to the practical applications in recording and summarizing the financial transactions. And these are all about the overview of the chapter 1 and 2. And let's move on to understanding double entry accounting. So, one second. Okay. So, in the double entry accounting is a fundamental principle in accounting that ensures accuracy and reliability in recording financial transactions. And it follows the principles that every transaction has dual effects on the accounting equation, with at least two accounts being impacted. One account is debited and other account is credited. And the main key point that I got by understanding the double entry accounting is first the dual aspect. Every transaction involves two aspects: giving aspect, that is a debit, and receiving aspect is a credit. And next is the accounting equation. As we mentioned before, assets is equal to the liabilities plus equity. So this equation must remain balanced after each transaction, reflecting the equality of resources owned and resources of financing. And next key point is the debits and credits. Debits is actually, it's a represent increase in assets and expenses or decrease in liabilities and equity. So debits are recorded on the left side of the account, and the same as credits, it's represent increases in the liabilities, equity and revenue, or decrease in the assets and expenses. So credits are recorded in the right side of the account. So I will in this scenario, I'm taking an example of purchasing an equipment for $5,000 in cash. So let's break down those transaction of purchasing in cash to illustrate double entry accounting. So first we'll identify the accounts affected. So which is the equipment account, represent the asset acquired, that is equipment, and the cash account that represent the asset used to make the purchase, that is actually cash. So recording the transactions. So we have to debit equipment account. It's increase the equipment account by 5,000 to reflect the acquisition of the equipment, and the credit cash account, that is a decrease the cash account by 5,000 to account for the cash paid for the equipment. And next is the impact on the accounting equation. That is assets, that is the equipment account, which increases by the 5,000, that is actually the debit, and assets, the cash account decreases by the 5,000, that is actually the credit. And the total assets remains unchanged, that is 5,000 increase in equipment offset by a 5,000 decrease in the cash, ensuring the accounting equation remains balanced. And what are the main significance of the double entry accounting? First is accuracy, and next is completeness, and third is analysis and the decision making. And overall, double entry accounting is a fundamental concept in accounting that ensures the accuracy, completeness, and analysis and the decision making, and reliability in recording the financial transactions by requiring each transaction to be recorded at least two accounts. It maintains the balance of the accounting equations and provides the essential information for analysis and the decision making. And this is all about understanding double entry accounting. And next, move on to the trial balance. So trial balance is a statement that summarizes the balance of all general ledger accounts at a specific point in time. So it mainly lists the accounts along with their respective debit or credit balances, and the total debits must be equal the total credits. So the trial balance serves as an internal control mechanism to ensure the accuracy of the recorded transactions before preparing financial statements. And what are the main purpose of the trial balance? So the main purpose is to detect the errors in recording and posting the transaction before preparing the financial statements. So as we mentioned before, the error detection and internal control. And we'll talk about the example of a trial balance. So in this example, we are considering the various accounts and their balances are listed in this table, and the balances are categorized based on their nature. That is the assets and expenses, liabilities, equity, and revenues. And in this simplified example, we can see the total debit balance is equal to $39,000, and the total credit balance is equal to the 87,000, ensuring that the accounting equation that we talked before, that is assets, is equal to the total liabilities plus total equity, remains balanced. So to conclude, so the trial balance is the crucial tool in accounting process and serving to detect errors and ensure the accuracy and maintain the internal controls. And it provides the snapshot of the financial position of a company and facilitates the preparation of accurate financial statements. And that's all about the trial balance. And next topic is the derivation of the balance sheet from the trial balance. So balance sheet, what is actually a balance sheet? It's a financial statement that provides a snapshot of a company's financial position at a specific point in time, and derived from the trial balance, that is assets, liabilities, and equity accounts from the trial balance are used to prepare the balance sheet. And for example, using the trial balance will demonstrate how to prepare a balance sheet. And we'll conclude this video by what we got all these slides. That is, understanding accounting fundamentals is crucial for effective financial management and decision making. And we got to know about the double entry accounting. It ensures accurate recording of the transaction, while the trial balance helps the identifying errors. And the next is the balance sheet. It provides a comprehensive overview of the company's financial position, and the further study and practice are essential for mastering these concepts. And these are the references, these three, and that's it. And thank you.